Hello and welcome to Smaulgld's Gold Price Prediction Circus. I want to talk about the gold price predictions. It equally applies to silver price predictions. If someone is trying to tell you they know where the price of gold is, that they're an expert, they've got a chart, they've got a date, they got supply demand analysis, for the most part, they don't. And I'm going to go through some of the more high profile ones, and you can see that generally when the price is going lower, the experts predict the price will go lower, and when it's rising, they predict the price is going to skyrocket. Inevitably, they're wrong, and here's why. Gold's fundamentals never change. It's a rock, it stays the same, it's no one else's liability, it can't default, it doesn't make promises, it just sits there. But the world around it changes, and you can't predict that. At least not on the monetary side. You might be able to project maybe the jewelry demand, but even then, you can't project it out that far. So the price of gold is very difficult to predict. Throw in manipulation, throw in a whole bunch of variables, and anyone who says they know where the price of gold is going to be in a year is either trying to sell you something or I don't know what they're doing. But let's just take a look at some of these gold predictions. Last summer, it was gloom and doom. Gold was done. No one was going to buy gold. Gold was going to go down. It was going to continue to go down, and it didn't. Now let's take a look at some of them. Goldman Sachs. Now, Goldman Sachs, they said last year that, or beginning of this year, gold was going to go to 1100 in 3 months. That was in February. It's going to be 1050 in 6 months, and in 12 months it would be 1,000. That was in February. Well, guess where gold is now? 1330. And a week later, they double down. They say short gold. Why they're saying this, who knows? They have a chart, they've got an analysis. Who knows why they thought gold was going to go down? 100% wrong. Then in June they come out and they change their forecast. They say, well, we'll raise them. Well, of course they're going to raise them. The price has gone higher, so they raise them to 1,300, 1,280, 1,250 per ounce in 3, 6, and 12-month basis. Well, wrong, wrong, and wrong. Okay, so Goldman Sachs not doing very well there. I just want to remind people of the Goldman Sachs Muppet Show. You'll see the illustration on the video that you clicked on, and that's this one here. It says, I've got an idea. You got the Muppets standing around a pet rock. We sell it to Goldman Sachs. And that is a reference to two things. After the financial crisis, there was a employee who worked at Goldman Sachs, and he wrote an article in 2012 in I think it was the Wall Street Journal, New York Times, I believe it was. And he basically said that the clients of Goldman Sachs were treated very disdainfully. They would buy whatever they were told to buy, and that he had heard at least 5 different Goldman Sachs managing directors call them Muppets. Hence your Muppets right there. You got Kermit, Miss Piggy, for those of you who follow the Muppets. Then, of course, last year we had a Wall Street Journal article where this journalist said, let's be honest, gold is a pet rock. This is when the price of gold was at its all-time, not all-time low, but more recent low at about 1050. And of course, he got a lot of play for that, but of course, he called it a pet rock, and now pet rocks are about $400 higher from where he first labeled them a pet rock. ABM AMRO in July last year, they joined in. Bloomberg's Goldman Sachs Curry sees gold dropping below $1,000. ABM AMRO says the same thing. Will approach $1,000 by December. Never got to $1,000. Goldman comes back in October 2015. Remember, we just covered the gold predictions that they set at the beginning of the year. But then they come back. This is last summer. They're talking about gold dropping to 1,000. Then in October, they say, don't be fooled by gold's recent comeback. Gold 1,000 in 12 months. Never happened. Now, there was a time when Goldman Sachs was also bullish on gold. Back in February 2013, what did they say? Oh, well, gold had dropped a bit, and they saw gold going to 1650 in 2013. The price was 1598 when they made that prediction. Never happened. Then they said, well, but gold will be 1450 in 2014. Way below that. Never made it there either. So gold finished 2013 at $1,204 an ounce. They predicted it would be 1650, and it never traded over 1610 after their prediction in February of 2013. And in 2014, gold blew right past their 1450 target on the downside and closed 2014 at about $1,200 an ounce. So Goldman Sachs has been wrong on the upside, the downside. Whenever they open their mouth about gold, they've been wrong, at least in the last 3 or 4 years. Deutsche Bank. Now, back last summer, fair value for gold. This is one of their commodities chiefs. It's about $750. All the ducks are now aligned for a gold slide. Makes the prediction $1,104 an ounce. Were they right? Nope. Gold went to about 1080 4 days later, and then that was about it. Gold is now $1,330, far away from the $750 that Mr. Lewis had said gold should be fairly valued. Now, Deutsche Bank in October 2012, when we had a bit of a correction off the high from $1,911 in 2011, gold was still in the $1,600, $1,700 range. Deutsche Bank lifts its 2013 and 2014 gold price outlooks to $2,113 an ounce in 2013 and $2,000 an ounce in 2014, with the prediction next year the price of gold could exceed $2,200. A surge in the gold price above this level is only a matter of time. They said that when the price was $1,775. Were they right? 9. Gold never hit $2,000 an ounce. It already peaked around $1,900 in September 2011. Now, it's not just central banks. It's not just the bullion banks that make these predictions. You've got this guru forecaster, Martin Armstrong, very popular forecaster, always criticizing the gold promoters, who he rightfully points out are always predicting that gold is going to skyrocket, and it goes up once in a while, but it hasn't skyrocketed in years since the period of time from, say, 2008 to 2011, when it actually did take off and double in a very short period of time. But Mr. Armstrong said back in July, jumping on the bandwagon when everybody was trashing gold, in an article called "Gold, the Panic Cycle is Here. Gold is sharply declining. It will break the 1,000 level." No. And everyone will start to look for the 600 to 700 area. Well, I'm looking for that. It reminds me of George, no weapons of mass destructions here. I'm looking for the $600 to $700 area. I don't see it. Then a few days later, doubles down. It's not over until the fat lady sings. The target forecast will be in the $600 to $700 level. We're going to go for bearish reversals from 1084 to 1075, 1042, 1026, and then we'll break 1,000. Okay, we know where the price of gold is today. It's $1,300, 20% higher than when Mr. Armstrong made his bearish assessment last summer, and more than 2 times higher than that. Where is the $600 to $700 area? Now, Mr. Armstrong was also a bull. 2009, gold 5,000. Made that prediction when gold was 1135. Was he right? I don't know, maybe one day he'll be right. But so far, he's a forecaster. He's got charts. He's got analysis. He's got everything but being right. Now, this one I like. This one, there are these 2 guys, Claude Erb and Campbell Harvey. Ever heard of them? I haven't. But they were given a big prominence back in the time of last summer when the price of gold was heading down. Market Watch touted them as study predicts gold could plunge to $350 an ounce. Authors of landmark study, such a landmark that no one's heard of the study and no one's heard of the people that wrote it, say the recent decline in prices is just the beginning. And they quote from this landmark study. I think I've linked to it. You can find it if you're interested in landmark studies that are wrong. The recent decline in prices is just the beginning. The gold community now needs to consider. They like to be paternalistic. You gold community, you have to now consider the distinct possibility that gold will trade as low as $3.50 an ounce. The first is gold's fair value, which is currently $8.25. So there's an internal inconsistency there. Where they come up with fair value, who knows? They say it's $8.25. Okay, well, if that's the fair value, why is it going to $350 an ounce? I don't know. Read the landmark study. Maybe they shed some light on it, but I don't advise you go back and read a study that tells you gold is going to be $3.50 an ounce and that we were at just the beginning of a price decline when 15 months later we're in a bull market. However, see, these guys, they always hedge their bets. It's $3.50 on the one hand. However, the same landmark study, if prominent emerging markets increase their gold holdings to an average per capita or per GDP holdings, they got to have some kind of formula, of developed countries, the real price of gold may rise even further from today's elevated levels. So their prediction is it could go down and it could go up. All right, I hope you didn't pay for that advice. HSBC, July 27, 2015. Gold may move within striking distance of 1,000. That's kind of true. It did get relatively low, close to that in December of 2015. But their average 2015 price forecast went from 1234 to 1160. They're pretty much spot on there. And then in 2016, they were saying from 1205 to 1275. On the upper end, they're not that far off. So HSBC has been kind of the closest. And so I give them credit. Now let's look at, but again, you could have thrown darts at a dartboard and been just as close. ABM AMRO, December. This is when the price of gold was at its utmost low. Gold will drop to $1,000. Okay, not much of a prediction when the price is $50 away from that. Gold price and forecast was made. Goldman Sachs said in November expected gold to hit 1,000 in 12 months. Okay, so all this shows here is that these people, these experts making these gold predictions are horribly wrong. It's not because they're not intelligent. It's not because they're not well-meaning. It's not because they don't have complicated formulas, or they don't have complicated formulas. They have intuition. They've got charts. They've got arrows. Whatever it is they have, what they lack is the right answer. And it's because a lot of these people also believe in free markets. And basically, they criticize, well, not Goldman Sachs and not Deutsche Bank, but some people who make gold predictions, they criticize central banks as not having the ability to understand markets and that no one central bank can do central planning because of the wisdom of the markets. Well, it's the same with the gold price. If there even is a free market in gold, the point is you can't predict the price of gold accurately. No one has done it. People have predicted higher, people have predicted lower, and they've all been wrong. So in the last couple of years, I've shied away from giving price predictions, and I'm not going to give you one now. I will just tell you that I don't believe in price predictions. And if someone tries to sell you a price prediction, I would give them, or tries to sell me a price prediction, I'll pay them what it's worth. Nothing. Thanks for listening.